Boom, here we are. We are lit again. Just like 10 pence hanging out with the family. Always love to see family and hanging out with them. And I really appreciate you guys being part of the crypto family. Here we stay on top of what's happening in cryptocurrency today because you need to be on top of it. There are always so many different pieces going on. It's so easy to get hacked and phished. So it's important to be on top of things. And I'm glad it's just been time and time again. The biggest beneficiaries of these investments are those who stick around during the bear market to learn the lessons that prepare and to get in the right investments to prepare for the bull market. So thanks for being a part of this family and for letting me be a piece of your journey. Thank you for being a piece of mine as we get into things. Welcome those of you guys who are here live. And thanks, man. Yeah, we're slowly building up the channel back to where it was. It's regretful that since I deleted it, there is no way to recover it. I talked, like I said, to Team YouTube, and they said there's nothing can be done. So if you have a YouTube channel, do not delete it because you will absolutely lose everything. We're starting from ground zero, but I mean, the quality that we have of the followers is incredible. I think the people that you still have around here hanging out in the chat and responding to things are going to be some of the most informed people. Before, there were so many scammers surrounding the channel. There's still a few, but I think you're going to have a generally better time now when you're interacting here. And it's definitely intimate, and that gives me the opportunity to interact more with you guys. So I personally like that bit of it. And yeah, it would be cool to get back to where we were, but I'm going to be patient. I have no choice but to be patient, but at least I got you guys, so thanks for that. So let's go ahead and start diving into things. I do try to be more expeditious here now with the content to just get you right in and understood with what's happening. So we have prices resuming to the downside. Shouldn't be too much of a surprise. Like I said, we've been trading within this kind of channel. So where you have Bitcoin, it's dropped even below $20,000. But what's been nice to see is that the floor hasn't dropped all the way down to like 17,000 bucks. Again, we have managed to stay right near around $20,000 for Bitcoin. So that's good. It's down 4.7% on the day. You have Ethereum down 8% at above 1,000 bucks, so it's at $1,048, and we still have nice historically low gas prices for Ethereum. So for the most part, you don't have these networks under heavy usage. We have volumes dropping off of a cliff for the most part as the tourists have left. They'll be back. It just takes time, and eventually people start seeing the virtues of crypto yet again. But right now it's the time to hate crypto, and that's usually the best time to be buying crypto. Not that I'm recommending it just because of the macro sphere again, but it just historically has been the best time to be doing that. So yeah, for the most part, we have a red day. We haven't broken to the downside within that channel, but we are seeing that these flag poles and bear flags continue to be made, and these are a just bearish formation that the TA leaves show us. So the flagpole being on the left, and the downside, if we do break out of the bear flag, tends to be about the same length as the flagpole. So if it plays out yet again as we've seen playing out, then we will see some downside that could take us to the psychological point of about $15,000 for Bitcoin for the big boy. And if not, just from the technical aspects, we could see that there's stronger support around 17,500 bucks, 17,000 bucks, but we'll have to see if that holds. And that's not guaranteed as well. Some are speculating that we have bottomed out, looking at some other longer term technical indicators, looking at the fact that we have never had Bitcoin really breaking below the old peak, the old bull market's all-time high of $20,000. We're sitting around that level, so that could give us a little bit of credibility here for the bulls who are buying. And there's always going to be both sides to an argument, just because of how big the whole space has become with options and futures. And so there's always going to be someone taking the opposite side of that trade and trying to buy into things. And we all know that fiat currencies are collapsing and that cryptocurrencies are durable. At least I would hope you understand that if you've been around for any certain period of time, as most of you watching this show are. I think we're the OGest of OGs. I think we can say that when you look at all the channels on YouTube, at least we have the most OGs for sure on this channel, without a doubt, because you guys came back. And so those who just want the quick buck tend to go to the pump channels, but we're not really trying to pump anything here, just trying to look objectively, always dig deeper. Like I've always said, always look beyond what I'm pointing out here. I make mistakes and I say the wrong thing all the time, and I'm not telling you whether to buy or sell. Just trying to present information for you so you can your own decision. But one piece of that information. Oh, thanks everyone. Yeah, smashing up those likes, they help us. Thank you for that. So QCP Capital gave us a little bit more information. They're a full suite trading firm in crypto, and they work a lot with CoinDesk from what I've seen. They gave us some more information as to how they are seeing what's going on with the market, as I do like to cover the markets firstly before we look at some of the other news. So an additional reason has strengthened our view that upside, this is with reference to Bitcoin, will be capped in the near term. This is the news about Mt. Gox. We covered yesterday on the show, so check that out if you missed it. Releasing approximately 140,000 Bitcoin in August. It is impossible to be certain about the exact impact given the numerous cross arguments and theories surrounding the release. Our main takeaway is that there is a high chance of Bitcoin supply flooding the market soon. The possible impact would be additional selling pressure on Bitcoin, and perhaps, and we're hearing this again, just like this new narrative that's come out. Life is just stories, right? Like Griff Green, shout out to Griff Green, someone who was on the show, and just such a great heart. He had really come out in an interview talking about the stories that we talk about around money and the story of Bitcoin being different than Ethereum's story. But this is a new narrative that's playing out. A new story is that this will perhaps lead to the outperformance, the selling of Mt. Gox tokens, the outperformance of ETH and altcoins against Bitcoin. So another entity here that is saying that is a possibility. Going to skip here to, I think, something that's very important that I've been covering, which is that the inflation print we're waiting for tomorrow, the big day is going to be where we're going to get the CPI print, the consumer price inflation print. So Wednesday here in the United States, that is going to tell us whether the Fed is going to be hiking more aggressively or less aggressively, maybe moving back to 25 basis points per hike from the 75 basis points that we've been expecting from the last rate hike that we got, that increases the cost of borrowing money pretty much all around the world. The Fed is just at the center of this. We have all these central banks really trying to control our livelihoods. It's terrible, but we're still participating in this entire system. And so what they say, do, and how they act really influences the price of everything in our lives to such a crazy degree. But anyway, whether it's going to be 75 basis points, it's pretty much locked in that this rate hike again at the end of this month is going to be 75 basis points. Then we've heard before it's going to be 50 basis points until they see several months of lowered inflation, dampen inflation, where they'll lower it to maybe the normal rate of increase of 25 basis points. Although I'm seeing we might be reaching, this is what Rio Vision's Raul Powell has been saying, we might be reaching the top of the channel where they can can actually be raising rates before they break something and cause some sort of issues with liquidity, with banks not giving out loans, credit locking up. That could be a real problem. So they would have to be forced to reverse course, although they're talking a big game right now. So anyway, based on what happens tomorrow, could play out with what could play a role in how we're going to see all these news publications and even the Fed speakers themselves coming out ahead of the FOMC meeting this end of the month, where we will get a little bit more hints as to how they're going to be seeing things, as to whether they have had any effect on inflation or not. But inflation's a lagging indicator. But that's basically what QCP Capital is talking about here. So the inflation print has been a key source of market movement this year, and we expect an uptick in volatility ahead of the event. So again, that's what we're seeing today. We're seeing this volatility. It's funny because what all these trading firms really, when they talk about volatility, they're not talking about real volatility. Bitcoin's giant swings up and giant swings down. They're always talking about just swings down. So yeah, of course, swing down in the markets today. But yeah, increased volatility, something we've also been expecting here on the channel for some time. So they continue to say, we're not outrightly bearish at these spot levels, but we think the sudden demand for call structures might have pushed the risk reversal levels a bit too much to the top side. Our base case continues to be sideways trading with the risk of sharp dips and upside capped, I guess mostly because of, again, macro and waiting to see how that plays out. Cryptocurrencies being on the riskier end of that parameter, and Mt. Gox tokens being sold. So that's just one entity, but that's for the most part I'm seeing a lot. Just a kind of risky time to bet everything and go all in into crypto, but sometimes that's how money is made. So I'm not knocking you if you're taking that side of the trade. But yeah, we have seen inflation for housing. I saw this chart on the Wall Street Journal just going nuts. It's just been going vertical. And according to the Wall Street Journal, climbing housing costs are set to keep inflation elevated this year, creating another challenge for Federal Reserve officials who want to see signs that pressures are easing before slowing their interest rate increases. Overall, we had inflation rate increase to 8.6% in May. So what we would want to see for the Fed to reverse course on their interest rate increases is over several months, according to them, seeing this number drop. So we'll see based on tomorrow whether 8.6 goes up or down. While corn, that's the main inflation, but core inflation, excludes a volatile food and energy, which is really what affects us, the average person, is food and energy. I mean, that's something that we have to cover almost every single day. If you have to get to work, transportation costs, if you have to eat, which is everyone, right? Food costs. But they have been quite volatile. In my opinion, they haven't been volatile at all. They've just been going up, and it feels like it's a lot more than the 6% that we've seen as this core inflation number is showing us that excludes that food and energy cost. But yada yada. Another thing that's interesting, that since apparently 2/5 of the core inflation looks at housing and housing prices, although that's all fudged, like we know how they get those numbers, how they actually calculate that. But I thought this was interesting. This is an interesting change in dynamics. So an increasing number of white collar professionals, some of whom recently sold homes, so they're sitting on a lot of cash, kind of like a lot of crypto investors who have been, and OGs who have been talking about prices dropping, and they've been waiting for the bottom, and they're sitting on a lot of cash on the side. They're sitting on a lot of stable coins. They were sitting on a lot of Celsius and sitting on Voyager and USD quite a lot, waiting for a bottom to hit so that they could begin flooding money back into crypto. And there's still a lot just sitting on the sidelines waiting for that. So anyway, an increasing number of white collar professionals also have a lot of money, not necessarily ready to go into crypto, but they're reluctant to buy houses because of record high home prices, rising mortgage rates, and limited supply. They are renting instead, helping to drive a frenzy for leased properties of all kinds and helping fuel the trend of offering above asking rents. Real estate agents have said across Atlanta, New York City, all sorts of major hubs where you're seeing a bidding war where even average renters are getting weeded out of the markets by people who've previously held homes but sold at what they foresaw to be a high in the housing market, which I mean, real estate has been high for a long time. Since 2008, it's just been a straight rally basically for real estate, but it hasn't really abated, and it's played a role in inflation going up, at least the official fudge numbers, which sucks because you see a lot of people who need homes just being driven further and further away from all sorts of metropolitan areas they might have grown in, or any other sorts of areas. So like in LA here where I'm at right now, luckily there is a rent control. So really the market here is, it can be quite good in favor of the renters, especially as we see this inflation climbing where they can only raise rent maybe 5% year over year. But so it kind of sucks to be a landowner or landlord on the other side of the token. So always going to be winners and losers, and it really depends where you're at. Celsius has continued to pay down their debts. So Celsius has been a big one here that had to freeze withdrawal. Tomorrow it's going to be the marking of 1 month since Celsius has frozen withdrawals, and they have been paying down debt from, like we looked at yesterday, they were paying down Aave, and they continue to pay down Aave. They owe $50 million now to Compound Finance, a decentralized finance protocol. They owe about $8.5 million only left to Aave, as they've paid off another $81 million in USDC stablecoin to Aave to pull out $410 million worth of STF tokens. So these are tokens, they're derivative tokens that they are basically supposed to be redeemable 1-for-1 ETH that exists right now for ETH that will be available in the future when ETH 2 fully launches and allows for withdrawals to take place. So basically these STF tokens will redeem you 1-for-1. They've been trading at a discount, believe it or not. I believe at a 3% discount. So if you were to pick up a lot of these STF and everything went fine, you could redeem them for more ETH tokens when ETH 2 officially launches the withdrawing to take place. But apparently, according to Celsius, according to blockchain data, if Celsius is able to pay off the rest of their DeFi debt, they're going to get $227 million more of digital assets to boost their liquidity and more funds, which is kind of a far cry from the $20 billion that Celsius had. I believe it was in May in customer deposits. So $227 million, not really that much more, but they have withdrawn more liquidity in recent times from, again, paying off Maker. And they still have Compound, again, $50 million to pay off, their total debt being $59 million. Not that much in the grand scheme of things, but just going to show again the power of smart contracts, that they have to be paid back even before humans have to be paid back. So BlockFi, another entity that's been very similar to Celsius in that you deposit some funds there and get some sort of yield, or you can take out a loan, and that's the primary way that they make business. BlockFi enabling these products on their platform. So BlockFi has been able to secure funding and allow for customers to continue withdrawal and depositing, and allow for services to continue just fine. I believe it was a $500 million loan that they were able to get. And so they've been, for the most part, fine. But we have to see, because if there is more downside, and there is all this kind of collateral damage that takes place if another firm were to go down that they were tied into, it just be scary, I would say, at this time to still continue, as we've seen Fed hiking interest rates, crypto platforms and firms going down, them all being tied together, customer funds being locked up. So $500 million, hopefully enough to help BlockFi in any sort of situation. That's something that you're going to have to figure out in your own risk management. Of course, I've learned a lot of my own through all of this, and hopefully you don't have to learn by example if that's if you're parked still on some of these platforms that have managed to weather this storm. And it's to be seen whether they'll be able to weather if we do have any future storms. But BlockFi has decided that they're not going to be accepting GBTC, so the Grayscale Bitcoin Trust, as collateral anymore. So Grayscale has been having a lot of trouble. They're suing the SEC for not allowing them to turn it into an ETF, their Bitcoin Trust, their product. And right now we've had a situation where GBTC has had a discount. So it's supposed to have Bitcoin inside of a share of Bitcoin, a fraction of Bitcoin into each share, right? And you can derive a net asset value. You can figure out whether it's a good time to be buying GBTC, which might be redeemable for Bitcoin. I believe that right now it's a year lockup period. It used to be 6 months, or maybe I have that backward. But anyway, point being that you have a fraction of Bitcoin in each of these shares, and you can kind of figure out whether it's a good buy to have this asset or not, this GBTC. But it's been trading at a negative 34% Bitcoin. So you would have been much better off holding actual Bitcoin than holding GBTC. There's been all sorts of people unwinding from their own GBTC positions because it just hasn't been the great arbitrage play that the institutions had been, and many individuals have been playing back when was it, in 2018. We were covering the show 2019 where Grayscale really blew up. But yeah, it looks like BlockFi has been unwinding all of their positions. It will no longer again be accepting it for collateral. They still had a few loans, but those have been paid off according to this article on the block that's reporting. There were sub $10 million loans. But it's interesting that they're no longer holding GBTC. So such a major player in crypto just not wanting to be involved with it at all. It's just interesting to me. Since at one point they held apparently about 5% of the total supply of GBTC. So one of the biggest players in that. Thought that was of note if you've been following that. Oh yeah, GameStop has launched their NFT marketplace. I'm not really covering that in any sort of detail. I'm not messing too much with NFTs at this time, but I thought this was also some other news that was of note. So there's a survey that's going to be taking place, a study into the impact of copyright laws and intellectual property rights with NFTs, because we know there have been all sorts of violations. You had American rapper Lil Yachty, who had to fight his own legal battle in California as there were two music companies that used his name to raise more than $6.5 million in venture capital to bankroll the launch of a collection of NFTs. You had Nike getting upset at reseller StockX for launching their own NFTs that sold NFTs that were linked to Nike that were redeemable for actual shoes. You had Miramax back when Quentin Tarantino had tried to launch without Miramax his own line of NFTs that were based off his film Pulp Fiction, that had a bunch of 7 uncut screenplay scenes in this collection, exclusive commentary, original handwritten scripts, but everybody wants theirs. So now, since there have been so many lawsuits, you had Senators Patrick Leahy of Vermont and the North Carolina Senator Tom Tillis, who have been asking for a deeper dive into what's going on with infringing of these rights. So there is going to be some sort of examination on behalf of the United States Patent and Trademark Office and the U.S. Copyright Office that is set to take place. This news first came out in June 13th, from what I can see here on Law 360. But I did want to update you and make sure that you're aware that that's something else, another narrative that's playing out, since I haven't been able to cover that. Turkey's official inflation is at 80%. Oh man, yeah. I mean, I think Turkey, Carlo, has been holding up quite well, because inflation can really spiral out of control, like we saw with Weimar Germany and everything else, and so in other places where it's exploded. So once it gets out of the bag, it's really something that gets difficult to dampen, which is why it's difficult to know really whether the Fed's efforts so far are going to be impactful or not. But only at 80% seems pretty good considering all the troubles Turkey has been having, but still terrible to everyone. So yeah, thank you for letting us know out here, Carlo, about that. Hey Josh, nice to see you. Just saying a nice hi here to the chat. Following you since 2017. That's such a long time, man. I feel like if I had to go through, I feel like we're doing it all over from the beginning again, but to go through all of it again and just to try to remember everything that's played out, it's just wild. We've been through so much. So thank you so much for that. Oh man. So Uniswap had a phishing scam that affected a lot of users. Apparently over 9,000, I believe at this point, different transactions have gone out where they deposited these airdropped tokens, and they linked to a malicious smart contract that linked to a malicious Uniswap website. So basically they deposited these to liquidity providers. They deposited these airdrop tokens that were supposed to be redeemable for Uni tokens, and it looked legit. And you had one individual fall for it. It looks like that lost over $8 million. That was a liquidity provider. So it's been affecting users quite a bit. It caused CZ, so the head of Binance, to start commenting on it. You had Uniswap, of course, commenting on it themselves. And they said yesterday some Uniswap LPs unfortunately fell for a phishing scam. problem far too common in crypto today. I wouldn't want you guys to fall for either. To be clear, there was no exploit, so no direct exploit of Uniswap. This was something that just taking advantage using social engineering of people. The protocol always was and remains secure. Here's what happened. A phisher airdropped malicious tokens to Uniswap LP's wallets. The name of the token directed users to a malicious interface that claimed the users could swap these tokens for Uni. This generated a set approval for all transaction, which, if approved by the users in their wallet, gave the attacker the ability to redeem all of the users' Uniswap version 3 LP tokens for their full underlying value. This is a good reminder for wallets and other interfaces to be vigilant about hiding spam and tokens with URLs in their names. Protect yourself from phishing by checking domain names. We operate primarily under the domain, so always double check, triple check that you're at the actual uniswap.org. Favorite that. I don't know. Make sure that it doesn't look strange, that it's not uniswap.net or .com. I haven't tried those. Those might redirect you to uniswap.org, but I would always double check. Airdrops that direct you to unofficial domains are likely phishing attempts. We will never airdrop users without notice on multiple official channels. That's why it helps to really be on Twitter. I'm trying to follow Twitter and see through all the noise to bring you what I think is important. But again, we all are involved in different tokens. We all have different experiences. Maybe you don't even like Twitter. Maybe you're taking a break from Twitter. Maybe you're going to be back if Elon Musk doesn't, in fact, buy Twitter or whatever. He's being forced by the courts to buy Twitter. But maybe you didn't like that Elon Musk was going to be involved and you left Twitter. But the crypto news plays out for the most part now on Twitter. So make sure that you're following at least, the heads of these companies that you're involved with, these platforms, so you can know what's going on in the official channels in case of anything. I think it'll pay you. So yeah, the attackers still had, according to Harry.eth, 90.86 ETH more to spend to continue to send out these malicious tokens to different wallets. So if you're a liquidity provider, watch out. And if you're on Solana, watch out, because just because you're using Uniswap on Ethereum doesn't protect you. It looks like the code is also weaponized for assets on Solana, according to Harry.eth. They've already spent 8.5 ETH in transactions fees to reach, oh yeah, there we are, 74,800 addresses that were given these. So a huge, large scale kind of attack, airdrop attack with malicious intent. And that we're seeing that the funds that are being stolen are being routed to Tornado Cash. Tornado Cash is a mixing service that functions on Ethereum that allows people to obfuscate their ether, where it came from. As you deposit ETH and it gets spit out from other people's ETH, it gets mixed over a certain period of time, spit out to you, and it's done in a mostly decentralized way. And that's what's being used right now, which is problematic when you have people trying to get their funds back. It's just pretty much no chance, really, once they've been mixed this kind of way. So sorry to hear about anybody who's been impacted. It's huge amounts of ETH. The Federal Reserve has put out a blog post, another joke blog post, and they're actually talking about Bitcoin here. As they say here, inflation and deflation with a fixed money supply, the US dollar, Bitcoin, and the gold standard. I just wanted to show you that this is taking place, but it's kind of a nonsense blog. Here we go. I'll show you the beginning of it. It's really not very long if you want to check it out for yourself on the Fed blog, St. Louis Fed. In the United States, we typically pay for goods with US dollars. Hence, we're forced to, right? It's legal tender, legally forced to use it. Hence, the Consumer Price Index, CPI, looks at a basket of goods priced in US dollars. But what if the CPI were priced in Bitcoin? The Fred graph above, this one, the red is Bitcoin, above shows the inflation rates for this basket of goods in US dollars, blue line, and Bitcoin, red line. Even our currently high inflation rate in US dollars is dwarfed by the towering peaks of the inflation rate in Bitcoin, not to mention Bitcoin's wild gyrations. Never in the history of the US dollar has the inflation rate reached the heights that Bitcoin has on several occasions in a few years. Bitcoin also exhibits severe deflations, volatility. Yeah, it's a brand new asset class, just about a decade old. Not too surprising. That's problematic for a currency used for transactions. With deflation, consumers expect goods to become less expensive and thus wait to buy, which can lead to a collapse of the economy. Given that the dollar has been available and not deflating, there was no economic collapse yet. To be clear, Bitcoin is used very little for transactions anyway. maybe because of these repeated deflations. So, yeah, no shit, that's something that's volatile. And again, this is all built off a system that has been based on the US dollar. These charts were based on the US dollars. We would have very different charts if Bitcoin had existed in a bubble and a brand new economy existed out of nowhere, born out of Bitcoin. But it didn't exist out of nowhere, and it doesn't exist in a bubble. It exists surrounded by all these fiat currencies, which trade in and out of it, which is how you get the value of Bitcoin, or the current price of Bitcoin in the first place. So this is just nonsense. But of note that they can no longer ignore Bitcoin. They're forced to write about it. And that might be the most clicked on article for all we know, since sometimes when Bitcoin is at its highest popularity, of course it's not popular right now unless you're trying to bash it. Like there was an article I'm not even covering today, which is Paul Krugman writing on the New York Times that was talking about, since right now Bitcoin is low, since cryptos are have dropped so much and have had their crash. Now is the time to focus on regulating it. Now is a time where it's politically palatable to be going after Bitcoin to protect. Yeah, just a bunch of nonsense. I don't even want to talk anymore about Paul Krugman because he's just such a negative Nancy and has been calling Bitcoin evil since as early as 2013. So I would just avoid the New York Times today altogether if you want to avoid his opinion piece, or just avoid the opinion section altogether. Oh man, but yeah, the regulators are right now trying to arm a response to cryptos, and it really helps again that you have Celsius going down, Three Arrows Capital, even though they're not decentralized, but being shown that we need to be protected from ourselves. But hopefully we've learned our lesson now with some of these platforms, although they continue to exist again with BlockFi. So you can see why the regulators are so excited to come after this. So yeah, Bill Geiger, in response to that Fred post that I just showed you, said the Central Bank of the United States is tweeting about Bitcoin, and they don't realize that inflation is due to manipulating the supply of the currency. It's over. With deflation, consumers expect goods to become less expensive and thus wait to buy, which can lead to a collapse of the economy. Yeah, there's a lot more that can lead to that than just something so simple. Anyway, Evan Van Ness had this to say, which I think is pretty bullish. Gas prices have been extraordinarily low on Ethereum in the last week. Like we were just looking at it earlier in the beginning of the video. We can see on CoinGecko that the price, oh, it went up. Wow, it's at 88 Gwei. That's more volatility than I've seen with gas prices recently. Hopefully, no funny business has been happening since we started the show. But yeah, gas prices have been extraordinarily low on Ethereum in the last week. And even at these gas prices, ETH will be deflationary after the merge, because the higher that we have ETH gas prices, the more it gets burned after the launch of Ethereum Improvement Proposal 1559, since gas fees are burnt. And so as we see gas prices lower, that means less gets burnt, and that could mean ETH becoming less deflationary after the merge. But if you go again to, what is it, ultrasound.money, that's a website, then you can see and simulate different things with the merge. You're able to see that it still be deflationary, which I think is pretty good news. So yeah, as we begin to wrap up, I want to say what I'm going to continue to do and follow is this show. I think it's actually pretty well done. It's on HBO Max, The Anarchists. It follows Anarchapulco, the great crypto conference that I went to. I think it was like 2 or 3 times, and I was pretty deep in there. I had interviewed Jeff Berwick, the founder, many times, considered him even a friend, really, and someone who was always very kind to the show, helped fuel the growth of the show, and it was just a great community of like-minded people who understood the perils of just trusting the Keynesian economics that we follow blindly, assuming it to be true like a science, when economics, as we're taught, is anything but a science. And so much more that led me to wanting to understand how crypto could be a big helper to free humanity. So I had labeled myself a crypto anarchist for a long time, although I don't really like labels at all. So I would recommend checking out this show if you have HBO Max. It's going to be worth your time. In 2015, Jeff Berwick, a Canadian entrepreneur turned provocateur, he used to be having the biggest conspiracy show right alongside Alex Jones before he was pulled off of YouTube, launched a conference in Acapulco, Mexico in hopes of promoting anarchy. So voluntarism, not having top-down rule, really just of respecting individuals around you, not using violence or anything like that, and breaking the law necessarily. The rule of law just being something that we don't need if we just respect each other. Mexico, in hopes of promoting anarchy in its purest form, an ideal espousing the absence of government with absolute individual self-rule. The event, called Anarchapulco, draws an international array of libertarians, fugitives, and families seeking to unschool their children, not all of them, to protect them from the bureaucracies of modern life, as well as cryptocurrency evangelists and others attracted to the idea of creating a stateless community free from governments and central banking systems. So, unfolding over 6 years, the Anarchists, a 6-part documentary series, chronicles a strange and deadly series. You know what? Let's just check out the... We're not monetized on YouTube anyway.
Do whatever you want.
Check out the trailer.
Anarchy just means self-ownership, the most peaceful ideology in the world.
The state has oppressed me since birth.
I was wanting more freedom and wanting to be controlled less.
We wanted a pure anarchist life for our kids.
Living in Mexico is a solution.
What would you think about a conference in Mexico? People just like you and I, who question authority, who want to live differently in Acapulco.
It will change your life.
No, we don't want anarchist people here.
It's going to be fucking epic.
Anarchapulco.
Biggest anarchist conference.
Trip to Mexico. I'm really excited. The world is waking up.
My best friends are anarchists.
Fuck the government.
Most of our people were buying into Bitcoin, coming in on private jets and yachts.
Wu-Tang Clan is here.
This beautiful paradise can be a beacon of freedom for people to migrate to.
And then the murder happened.
An anarchist has been shot to death. Tragic situation.
There was some sketchy stuff happening behind the scenes. You need to stop, or there's going to be serious consequences. You listen, or you die.
I heard bang, bang, bang.
I'm scared out of my mind.
There was a legitimate fear that there's a bomb at the conference. At which point we were like, what the fuck?
Crypto crash.
We were struggling. We were all pretty desperate.
It's amazing how destructive human beings can be if they decide to not cooperate and play nice.
There's a lot of bloodshed in the city, just all over the place.
This is real anarchy here.
This is not okay. Not okay at all.
They are going to come after us. We have to be strong.
Is there a limit to the sacrifice that you're willing to make?
No.
To fix the broken world?
The blood is in the streets. What are you gonna do?
Are we strong?
Man, those those conferences were a mess, but honestly, they had some of the best speaking and talks that I've ever seen in my life. That really inspired me in a huge way to promote crypto early on. I just saw it as one of our only ways, and still see it at the end of it as one of the things that could be left if we have to pick up the pieces based on the crap that the debt-based system that we built now. Instead of having Bitcoin at the center, the leading minds and thinkers around Bitcoin were at this conference. All sorts of individuals who were the big, who would have helped you really if you had gotten into crypto in the first place and you were following many of these people and that was your first exposure to it. I know it was for me. I'd been watching Jeff Berwick since before I started my show. So I think it's pretty good. I ended up even making a documentary. I linked it down below, a vlogumentary. I did it every time I went, I'm pretty sure. And you can check it out in the description down below. Jeremy, let's see. Let's take a little ground level look at it.
I'm gonna try to walk in there barefoot and see if we get away with it. I don't know, because it's Freedom Conference. I'm gonna try to throw a fit if they don't let me in without shoes. Because if I learned one thing from Arcane Bear during this whole trip was, don't accept no. If things seem irrational, just be irrational yourself until you get what you want.
Man, I felt like such a young bloke back then. Maybe I'm missing you guys, but yeah, if you want to see any of my old videos as well, just like that, you can go to my website, cryptosnews.com. There you'll be able to see the latest video, whatever it is that's playing out on YouTube. You'll be able to click on top of my old videos and get a link, or you can just click down below to Odyssey, where you will see all my old content that we followed throughout the years. And man, have we come far, like I've said before. But yeah, that was one of the ones that I put quite a bit of effort into, was making these vlogumentaries. So if you want to see more about what it was like in Acapulco, check that out for yourself. And I'll finish up with a quote of the day here, which is, risk comes from not knowing what you are doing. Warren Buffett. So thank you for trying to stay on top of what you're doing by trusting this show to bring you the news that is hopefully relevant to you. If I can add more sorts of news that will help you, that will help as many people as possible, please let me know how I can do that, or any other constructive criticism down below in the comments as we try to get the show good for you guys. It's really about you. It's a two-way street here, and I thank you so much for the support. Take care, everyone. Thank you for joining me live here. Hey, Christoph, Number of Things, OG Foundation, Soda Popensky. I didn't get to say hi, I'm pretty sure, to Soda. Sean, Stevie B, and everyone else who supports afterwards who can't tune in live. Hopefully I get to catch you live soon. Take care. Much love, everyone, and stay cryptic. Peace.